We got him in the studio, folks. My next guest is bullish on equities. Joining us now, Oppenheimer Managing Director, also Chief Market Strategist, John Stoltzfus. John, let's talk about what's happening here, because it's, again, you can see it every day. We look at the breadth, we look at what's up, we look at the sectors, we look at factors, and I'm looking at, even right now with you, for a while you came on, you were coming on the show, and you had three O's, three outperforms. Yep. And the first thing I noticed today when I got your data was, hey, wait a minute, there's a fourth outperform, and you're moved up to financials to an outperform.
Yeah, we lifted the financials somewhat. We were amazed that they were beating up the financials at a time when you have an expansion going on. You have the consumer is still shopping, slower, but still shopping. Huge investment in technology. The reality is it's a world of credit. Everything floats, and the big banks are a very responsible source of that, providing credit.
And you've heard enough confidence in just the last 24 hours, I'd imagine, from these big banks that, okay, this is we won't say safe, but you're pretty confident.
It's an area in terms of sectors that is a driver. As long as you've got good economic growth, which we do have, it's modest, okay, it's resilient instead of robust. I like resilient because resilient has to face challenges and overcome them. Right. And so this is good for cyclical stocks, and that's why we like tech and communication services, industrials.
I was reading your note, you also prefer GARP, right?
Yeah.
Growth at a reasonable price.
Yes.
One of the things that we've seen this year is, companies without profits, outperforming companies with profits. Essentially, you're saying get back to basics a little bit.
We think you need to get back to basics, and you need to be diversified. So don't just own the outperforms, but also look at some of those performs, because they've got good opportunity there to move through and prove their value. Because you've got to have some growth and some growthier value is what we believe.
All right, I'm going to bust your chops a little bit here, because I also read in your note that you like growth-driven value stocks, and I'm saying that sounds oxymoronic to me, like Silent Scream or old news or bittersweet. Growth-driven value stocks, give me that. Is that the dodo bird?
No, it's those value stocks that use technology to keep themselves worthy of investors' loyalty as good basic earners. They're not the biggest growth earners. They're the second string technology players, even thirds, but they're well financed. They have, we're in technology today, we're all on the upgrade cycle, whether we like it or not. That's the reality. It's upgrade or get left behind.
So you just mentioned the economy here. We're going to pull up this next chart because great data out a lot, but this is one thing that caught my eye this morning. New York Fed Manufacturing Survey. This is the best result, folks, in 2 years, the best in 2 years. You can see increased substantially in July. New orders, shipments picking up sharply. Employment grew for the 6th consecutive month. These are the kind of things you want to hear, particularly when the goal is for a manufacturing renaissance.
And especially when you consider the political challenges in New York State and in New York City. It's amazing.
It's amazing. Governor, look at this, please. I mean, don't kill this. This is the goose. Right. The goose is trying to lay golden eggs, and you want to stop it.
Very true.
Open those data centers. So we couple this PPI number, CPI number. It feels like everything is moving in the right direction. Maybe resilient can become robust after a period of time.
I'll take resilient, because resilient shows it can take it and it can overcome it. It traverses the hurdles, and that's what we've had. A lot of that is a thematic since 2008. And a lot of that is a good Fed, and I think we've seen that Warsh looks pretty good.
Yeah, I wanted to ask you about him. I've loved him, from the very beginning. And I think the street is, at least the financial media, is misinterpreting what he's trying to say and what he's trying to achieve. And for me, John, I feel like he's trying to create a Federal Reserve that's responding to Main Street as much as it is to Wall Street.
Very much so. I think he realizes that you need investment, and you need strength within the investment community to provide jobs, to develop trends and opportunities that will create more jobs, help the communities. This is where it's at. Capitalism is a good thing.
Yeah, we call it a virtuous cycle. Great work, John. Always love talking to you.
Same here.
You're looking good there too, my man. You're looking good.
I apologize for no tie, but I must have left it at home and rushing out of the house today.
You look great, my man.
Thank you.
All right, hey.